Good morning, Checkmate crew. It is Tuesday, September 20th, 2022. It is good to be with you all today. Thank you for joining us. If you're joining us on YouTube and Twitch, we do have our link to our Discord on our description. There's no paywalls, no fees. Everybody's free to join and participate and bounce trading ideas with each other. We talk trade 24/7 on that Discord, and that's where I send my alerts out as well. All right, let's get started. Let's get right down to business. We are seeing the market open a little bit lower today. Volatility is up. Remember, guys, I've been saying this since June, and I've been really focusing on this, especially for the past week or two. 5-year treasuries, short-term interest rates, okay? Shorter-term interest rates. Right now, all right, we're seeing shorter-term interest rates really spike, and that is really causing a dash for cash, all right? See this? ZF? Told you guys about this. I told you guys, look at this like a hawk. And yesterday, we couldn't reclaim, on Friday, we reclaimed, I guess partially some of this level. This level is, by the way, goes all the way back, I believe, to 2008. Or even before, actually. I think this goes back a long ways. But anyway, this is a very, this was the lows back in June. And we partially regained it on Friday, but then we lost it yesterday, all right? And so that, stopped me from going long on anything. I was trying to leg into more of, HUT, Ford, UUUU, all the plans that we always talked about, okay? And this really stopped me from doing that. I saw this. It lost that level again on yesterday, continuing its downfall. If this keeps going down right now, we're going to see some more downward pressure on the indices, all right? Now, several of you have talked to me about, does this work all the time where ZF is going down? Will markets always go down when that happens? And the short answer is no, all right? And here's why. Depending on the economic situation, depending on where we are and where we've been, what data is important is going to change, okay? In certain market conditions, there are certain data points that are very important, and those same data points, if the market conditions change, become noise, all right? So in generally, when the economy is in a stable expansionary period, interest rates tend to rise, all right? Not just long-term rates, but also short-term rates will rise too in a very stable, growing economy, all right? So that means ZF will fall gradually as we have economic expansion, okay? So, so again, and would that be an indicator that that the markets are going to fall during economic expansion? No. Right now, the reason why this is an important data point is because for the last 10 years, we've had TINA. There is no alternative, all right? Interest rates were so low, bond yields were so low that, there was no alternative to equities, all right? Now that is changing. We're going from this very loose conditions. Now we're going to tighter conditions, okay? So what does that mean? That now, short-term bonds are an alternative, all right? So we now are going to use this to see what is that demand for cash, okay? So I told you, if this goes down, it's dash for cash. And let's look at King Dollar. I mean, lo and behold, look at that. Dollar up, boom, all right? All our risk-off currencies, or our risk-on currencies are down today. Risk-on currencies being Euro USD, okay, is down, all right? Australian dollar is down. Australian dollar going down puts pressure on metals, all right? And China, as well as the British pound. The British pound, also a risk-on currency, all right? Speaking of currencies, okay, I'm going to add this one to our plan, is the US dollar Japanese yen. All right. I'm putting this into our plan. I am going to short this. All right. I think, okay, here's my thesis. So far, the Bank of Japan has been the lone dove in the world economy right now. Most central banks are tightening. Okay, I mean, even Sweden came out, I believe, earlier this week, and they raised interest rates by 1 full percentage point. They were expecting 75 basis points, but that's not what happened. They got a full percentage point increase, and the Bank of the Sweden, I believe they call it Riksbank, their central bank. I may have mispronounced that, but they came out to say that pricing, controlling inflation and controlling the rise in prices is more important than the short-term growth, all right? So they came out with interest rate spikes. So all over the world right now, central banks are hawkish. The lone doves right now are China and Japan, all right? Now, here's what I think. I think next year, 2023, most central banks are going to get dovish. They're going to pivot dovish. And then I think Bank of Japan will be the lone hawk. All right. They're starting to see their inflation go up. They wanted to see their target go to 2%. Now they're at 2.8, which is the highest inflation they've seen in decades. All right. So at some point, there's going to be some pressures. Already in their business community, they're talking about pricing pressures. Okay. Japanese companies are already starting to feel that. Consumers are also starting to feel that too. At some point, there will be impetus for Japanese officials to curb that inflation. So, which means they are going to have to tighten or at least stop all these loose monetary policies. All right, and I do think in the midst of everybody really pivoting dovish and and Bank of Japan being less dovish when everybody else is getting more dovish, I think it's going to strengthen the yen, all right? Now, this is the US dollar Japanese yen pair. The US dollar is first. So when this goes up, it means the Japanese yen is weakening. If it goes down, it means the Japanese yen is strengthening. I will not be playing this via Forex. I will be using the 6J futures. This is the Japanese yen futures traded on the CME. I do have my levels right here. Okay, I have two alerts right now. One at 0.006955, and the other one at 0.006921. Let's call it 6920. I really want to buy in this 0.00690, 0.00692 zone. I really want to buy in this zone. Okay, that's the edge of the price structure. That makes risk management very easy. So it's that bottom alert line right here, the bottom golden line right here. That's and that was the lows just a few sessions ago. If it revisits that, I will go long on the 6J futures. All right. And after I go long and it passes this level right here, which is around 0.007, I'm going to start selling covered calls on this 6J futures, okay? I'm going to wheel this, but I'm not selling puts for assignment. I'm just gonna buy right here, and then I'm gonna set my stop on a close below the lows. So very low losses, I wanna keep my losses as low as possible if I'm wrong, all right? And that's why I'm going to be patient. Yes, is it possible that I missed the trade because I'm being too patient? Very possible. But right now, I don't want to take risks unless I know that my losses are going to be small. Okay, so I'm going to be very patient, wait for this level, go long. Once we get to these highs right here, I'm going to sell covered calls, sell a little bit out the money. All right, and hopefully I can keep this position all the way up. I do think that the Japanese yen, over the course of weeks, months, it could get back to around these levels right here. All right, that would be about $10,000 per contract win. All right, about $8,000 to $10,000 per contract. The maintenance margin on Japanese yen futures is $3,000. Okay, that's a huge, huge win. And not only that, I can sell covered calls along the way. That's a beautiful trade, baby. That's a beautiful trade. So I'm going to be taking this as part of my plan now. 6J, Japanese yen, boom, okay? part of the plan now. All right. Let's get into equities right now. We're seeing the equity market sell off what is it? What does that say? 1.1%. Wow. So, okay. So we're seeing, sell off. That's really funny on CNBC yesterday. And I don't really put that much in media. You guys know by now what I feel about mass media. They're not your friends. They don't really report what's really going on. It's clickbait. They want they just want you to click, and they sensationalize things. Okay. Everybody was talking about, there's usually a pump before FOMC. There's usually a pump. Well, we're not getting that. And again, what's really important here is ZF. All right, I cannot stress that enough. If you're going to watch only one chart today, okay, if it's only going to be one chart, you're going to be watching the ZF futures, the 5-year Treasury futures. Okay, this is the chart to watch. Okay, now. Last week, we had a number of companies come out with some pre-announcements about more pain ahead. One of our stocks is involved. Actually, it was last night where Ford came out with a pre-announcement, $1 billion of extra costs due to supply chain issues. But last week, we had other companies too. American Airlines, Honeywell, FedEx. Not so good as far as... forward-looking guidances. So right now it seems to be a very common theme: excess inventory, slowing demand, problems in China, problems in Europe. It seems to be a common theme. Costs are going up and demand is coming down. All right. So if it seems as if these rate hikes are quote unquote working. Okay, it's working. So we're already seeing companies, come out with their pre-announcements. Again, Ford, part of our plan. Actually, it just right as we just started this live call, it just went through our first level, 1380. Remember, I said 1380. That's where I'm going to be looking to buy Ford. Well, I'm going to change my plan now. Okay, I'm changing my plan. I am not sticking to that 1380 level. What I'm going to do is. Wow, it's free falling right now, but I am going to sell out the money puts for assignment instead of buying shares. So I'm going to be selling out the money puts. Let's actually take a look and see what kind of puts would be good. Right now, I'm going to be probably looking at October, the October 21st, which is the October OPEX. Actually, are we going to get paid if we go somewhere else? Oh yeah, we do. We get paid on the 30th and the 7th as well. So either 30th, 7th, or the 21st. Actually, I'm going to lean toward the 30th or the 7th. So I might start selling some puts. If we're doing October 7th, those 13 puts don't look so bad. All right. If we look at September 30th, again, those 13 puts, not so bad. Not so bad at all. So I'm going to look for an exhaustion signal today. And hopefully we can sell some puts. But I am not going to be buying shares right now. I do think that, with the ZF going up like this, we might be seeing a little bit more turbulence ahead. Also, our liquidity data just did not improve all that much yesterday. If you looked at our junk bonds ADL, actually, let's go to our junk bonds ADL line right now. Our junk bonds ADL line really didn't do much last night. It was plus 74. Average, we're seeing plus or minus 150, 200 points, only 74. That's not really all that much. Okay, so right now our junk bonds advanced decline line is still in its major trend down. Usually what we want to see is this turning up, and usually this will turn up about a day or two or so before the market turns up. And if it's going to be a sustained rally, we usually see this continuing up as well. Also, our New York high-low line, it's just not curling up. It's still going down. And since the 80s, we have not seen a sustained rally without the high-low line curving up. Okay? And it's been a very good indicator. So again, I'm going to keep using this until it stops working. We never saw the moving averages curl up. We never saw the actual New York high-low line get above every single moving average. It just hasn't. We haven't seen that since November, December of last year, of 2021. Okay? So since then, We've been in this downtrend. Yes, we flattened out a few times, but it's never been able to curl up. And until it curls up, it's not a signal. Okay, it's not the Moab, the mother of all buy the dips, and that's what we're really waiting for. Okay, so those are our indicators that we're looking at as far as the equity market indicators. Let's go ahead and take a look at some of our bond market indicators. TIP TLT gapped up today. Look at that, gapping up. All right. So what does that mean? Does that mean our commodities doesn't look like they're gapping up today? We're seeing corn is going up. So we're seeing some strength in corn. Wheat, natural gas was positive earlier, but I guess it's losing some of its gains. And oil stubbornly stuck in this zone right here. Okay, overall commodities DBC made a huge recovery yesterday. It's giving up some, not all, some of those gains today. Okay, so TIP TLT forward looking, that's a very forward looking indicator for inflation. That's the treasury, inflation protected treasuries divided by long-term treasuries. Let me just go back to that so you can just see the chart one more time. TIP TLT, it looks like it did gap up today. All right, move index. This is the volatility of bonds. Generally, when this goes up, we see the VIX also come up as well too. So that'd be, right now I think VIX is up too. So I think this is playing out exactly like, one would expect. As far as other indicators, our growth to value is still on its way down. If you guys are going to play a bear market rally, I would suggest you guys go with a value name or a Dow component or something like that, because that's what this is telling us. Not that I'm playing a bear market rally. There is nothing, let me say that again, there is nothing that points to a bear market rally right now. Okay, there's nothing, all right? Maybe options positioning, but, actually, let me talk about options positioning for a second, too. Last week on Friday, again, biggest OPEX in stock market history. It was a quad witch as well. Dividends got paid out. I saw on the SPX option chain, we had, actually, let's go to the SPX chart. On the SPX option chain, all right, we had lots of put buying happening at around the 3,600 zone, all right? This 3,600 zone, which is the lows that we saw back in June, lots of put buying here, all right? However, there was a lot of put selling here. It's really funny how it's corresponding to our value lines. Remember, these are our value lines that we set out way back. I mean, these were drawn like way back. All right, Q1, Q2, or even maybe before. Some of these lines even before. Okay, but basically these are multiples. All right, this is like 14.5 times forward earnings. This is around 13.5. Right here is around 12, and this really bottom one, is 10 times forward earnings. Okay, 10 times forward earnings. So right now, what we saw last week on Friday was there was a lot of put buying here at the 3,600 zone, 3,600 to 3,650, around 3,400 to 3,450. We saw net put selling. All right, net put. No, I'm sorry. 38. It was 38. I'm sorry. Let me take that back. All the way back. Start from the beginning. Around 3,800 is where we saw a lot of put buying. Okay. Lots of puts were bought at 3,800. Lots of puts were sold at 3,600 right here. And then back at 3,400, we saw a lot of put buying again. I think right now the setup is if we see increased volatility, what we might see, okay, is if we lose that 3,800 zone, let's say not enough market participants cash in those puts at 3,800 that they bought, we could see it overshoot and get to that 3,400 zone. And if that happens, we might, that 3,600 zone. And when we get to that 3,600 zone, we might see a gamma squeeze downward. Okay, since there's a lot of negative gamma at around 3,600, we might see those put sellers panic. They panic to cover. They cover their short puts, and so we might see that wick down to 3,400, touch 3,400, and wick back up. All right. We actually anticipated this starting from June. It was actually in the end of June where I talked about this, that if, I said, oh, wouldn't it be crazy sometime after September or so if we see that a weekly wick that touched 3,400? Remember we talked about this? Right now, the options market setup is such that that is now a possibility. Okay. If we lose that 3,800, all right, there's really nothing stopping us till about, let's say, 3,400 or so. All right, 3,600, like I said, is where there's a lot of short puts. And again, in those areas, that's an area where we could see potential panic. All right, we could see people trying to cover all that short gamma. All right, which means they would have to buy back all those puts. Buying those puts means the market maker has to, has to sell those puts, which is a bullish position. So they need to offset that with a bearish position. So we might see that huge wick down to 3,400. All right. So we might see that weekly candle wick hit that 3,400 and bounce back. That would be a very, very bullish signal that, right here is where the institutional bid is coming in. And again, this is around, I think it was at 13 to 13 and a half forward earnings. Okay, 13 and a half times forward earnings. All right. Some of you have said, well, what's the likelihood that we're going to see lower multiples? I mean, we've seen lower multiples before in bear markets. All right, we've seen that before. This is from Yardeni. Look at the S&P 500 forward earnings back in 2008. It went all the way down to 10. Okay. So it depends on what your forward earning estimates is. Right now, the consensus for forward earning estimates for 2023 is around 244 times 10 would be 2,440. So if we see a 2008 style crash, I'm not saying that it's going to happen. I'm not saying that that's going to happen. But if it does, I'm just saying multiples have been compressed before. It's not out of the realm of possibilities that could happen. I wouldn't bet money on it that it would happen now, but if it happens, again, we're not trying to predict the future. We're trying to anticipate what could be, and if that happens, I think that's a wonderful buying opportunity. That would be part of our Moab right there. All right, I think and again, my plan really hasn't changed for the S&P 500. I'm going to start nibbling shares for a SPY for my long-term portfolio right here when SPX gets to that 3650 zone. And then when it gets to, that's 15 and a half times forward earnings. Again, 15 and a half is, would be around right here on the chart of forward S&P 500 forward PEs. All right. 13, all right, or so, 14 or 13 or so would be more on the bottom end of that range. And again, that would be around that 3,400, 3,450 zone. And that is where I'm going to do a lot of my SPY buying. And then under that, I really don't think it's going to get under that. But if it does, I'll buy some in the money calls as well too. All right. So here are our valuation lines. And again, that's what I'm going to be using to leg into some more SPY shares for my long-term holdings. Okay. If you listen to our Theta Thunder series, our Theta Thunder first episode went over selling covered calls and how to yield 10% or more in a very low risk way and generating that yield around your SPY holdings. So I do recommend you guys take a look at that and see what that strategy is about. Okay. So that's our S&P 500 plan. All right. As far as our other plans, UUUU, I didn't even check this at the open. It's coming back down. Great. Okay. Wonderful. All right. If it gets to this level right here, again, if it starts breaching 6, gets into the 5s, I'm going to be buying some more shares right here. Okay. I'm going to be buying more shares. All right. HUT. Getting closer to our buy level. I really want to wait for that 165. It makes that little wick down to 165. I am a buyer. Okay, I'm a buyer right there. PPC is another one of our holdings. PPC. I bought this at 28.50. So as you can see, I'm down a little bit over 10% on this. I mean, I nibbled shares. I wanted to buy some more if it went down to like 24, 25. I don't know if I'm going to add to this. I will let you guys know, but right now I'm a little bit underwater on this. We'll see what happens. I still believe in this company. I still believe next year, with food prices still going up, their margins will go up. But again, it's all about risk management in the end. We'll see what happens. Okay, we'll see what happens. Actually, it's got a more of a muted response today than most other stocks, only down 0.25% today. Okay, so that's my plan for equities. I also, the other big news today is tomorrow is FOMC. Okay, tomorrow is FOMC. Tomorrow is the rate meeting for the Federal Reserve here in the U.S. Right now, there is about the market is pricing in about an 18% chance of a 1 full percentage point rate hike, 82% chance of a 75 basis point rate hike. Right now, we're pricing in now 4.5, 475 as the rate by March 2023. Remember back in May, William Dudley, Bill Dudley, ex-Fed governor, said 5, right? Remember when I told you guys about this? 5% Fed funds rate, okay? And I said if Bill Dudley is thinking 5, okay, if Bill Dudley says 5, Jerome Powell is thinking 5. Okay, and sure enough, now the market now is saying, okay, we might get to 5. All right, I think we're gonna get to 5. All right, we should have just listened to William Dudley from the very beginning, and just made it 5. Okay, I think it does go to 5. I think in the end, probably after FOMC, we might see the shift one more down. We might see this bar come up a little bit. I wouldn't be surprised at all. Again, I'm not trying to predict the future. I'm just anticipating what could be. And remember if I said, remember when I said back in June, if we get to 5, don't be surprised if we see lower multiple valuations or the institutional bid coming at lower multiples. So if we see 5, remember I said if we see 5, we have a very good chance of hitting this 3,400. It looks like it. It looks like it now. Now the options market is positioning like that now too. Okay, so everything is now coming together. Okay, does it mean it has to go there? No, it doesn't. It doesn't. But things are starting to set up for this to become a reality. All right. And again, we're just trying to be like a good chess player. I mean, we call ourselves Checkmate trading. We don't know what the opponent is going to do. We can't tell the future. We can't tell what the opponent's going to do, but we can anticipate 5 or 6 moves ahead, and we can plan ahead just in case if the opponent does what we anticipate, we have a plan. Okay? That's what this is all about. It's about formulating a plan so that we are reacting not to emotion, but we are reacting based on the plan that we have. Okay? We're acting based on a plan and not reacting based on emotions. Okay? That's the power of planning ahead. All right? So that is equities and markets in a nutshell. All right? Let's go over crypto. All right? Crypto. Very interesting stuff, actually. One of the things I noticed was not a significant, but a decent drop in open interest. Remember how we saw $7.4 to $7.9 billion in open interest? Well, now we're at 6.5. So guess what? After the merge happened, what did we warn everybody? MSCA Code and I, we talked about this. We talked about this multiple times, not just in the special session that we had on the Friday before the merge, but we also talked about it in many of the high noon highlights we've had before. This could be a sell the news event. Buy the rumor, sell the news. Okay, buy the rumor, sell the news. Remember, we said that is a possibility. Okay, and lo and behold, we were monitoring all these institutions buying December and March call contracts, and guess what they did after the merge was successful? They sold. They took profits. Okay, so we saw a lot of calls being sold. A lot of the block trades that we saw, last week were call sells in December and in March as well. All right. So let's actually take a look at some of the block trades. I just checked it right before the video, but I'm not sure if there's any other block trades that went through. Sometimes in the mornings, you know, as I'm doing that equity section, sometimes we see some block trades happening as the New York Stock Exchange opens or in the middle of the day. No, it hasn't really changed. Okay, so yeah, you know, we're just noticing some sells. Now we're seeing a lot more participation in the November contracts as well too. But if you actually look at, you know, here, March, December, you know, we're still seeing some sells happening in some of these longer dated expirations. So it looks like November. I'm seeing a lot more of these Novembers popping up. The skew. It's still a backward skew, except, yeah, it's mostly backward skew. Okay, so yeah, it's mostly backward skew. Again, I'm just checking to make sure nothing has changed, because it does change quite often. It's not a very, very big market. It's not like S&P 500 where you need a lot of participation to change, you know, the dynamics of the options market. The options market in Ethereum is still relatively small. Actually, it still looks like most of the volume is actually still in the December contract. So those block trades in November must be like one-offs or something. Let's actually take a look and see what's going on in the December contracts. We'll take a look at the November contracts as well too. For this, let's see. They always make me redo this every time I come to this page. Yes, here we go. All right. Oh, they changed it, so it's not these little bars on the bottom. They changed it to this now. Okay, so let's see. We don't want to see that. We want to see the Novembers. All right, the Novembers. Yeah, see right here. There's a lot of OI right there, or lots of volume here. Volume and OI. A little bit out the money and not as much on the put side, although the put call ratio is quite small. It's always been that way for Ethereum. December, this is where most of the volume is, and it looks like it's for December calls. All right, December calls. So it could be still some profit taking happening right now. Okay, maybe some of the stragglers who didn't really take profits quickly enough. You know, I'm sure they're still liquidating some of their positions now. Okay, especially with this downturn happening in Ethereum and in Bitcoin. By the way, our plan still really hasn't changed. Let's actually go to the Ethereum chart here. I thought we were going to get our 1220 zone yesterday. We were close. We were like within, I think, 40 points from it. We were very, very close. I got alerted, but it didn't trigger. It didn't trigger. Or at least it didn't trigger yesterday. I haven't checked today. I haven't checked my crypto account today. I'm not sure if it actually triggered today or not. But Ethereum, no, well, actually now it's coming back down. So yeah, so we saw Ethereum, it almost got there, and then it popped back up later in the day. So now maybe that was just a little bit of a, you know, quote unquote dead cat. We could still see that getting into that 1220 zone. That is my first buy level. And of course, my main buy level, something that we've been waiting for, feels like forever, but months and months, is this red line in Ethereum Gold. Okay, when Ethereum Gold gets to that 0.55, I definitely want to buy large there, okay? And hopefully we get our MOAB at the same time as that so that we can have some conviction on this trade. We'll take things one day at a time. We'll see where the MOAB goes. I don't think we're anywhere close to the MOAB because of what I see here, okay? I don't think so. As also, too, with our junk bonds ADL, I just don't see it. Today, where's HYG at? Where's HYG at? Oof. Oh, well, there you go. We'll see. Hey, we'll see. Hey, it's about closing prices. Okay, so let's see what happens at the end of the day, all right? Any questions, comments, rude remarks, anything you guys want to see? Going once, going twice. All right, guys. In that case, that concludes today's market memo. Again, if you guys are joining us from Twitch, if you guys are joining us from YouTube or Facebook, join our Discord. The links are in the description. We talk about trade. I alert you guys on my trades. We have also different traders here with different styles of trading, and we bounce ideas off one another. We'd love to have you participate. Come join us. Again, it's free, no paywalls, no sub fees. Sub fees is poverty money, all right? We make a living with trading around here, okay? So this is, for the people, by the people, for education, and for camaraderie as well. So come join us. Again, guys, we're going to be doing this tomorrow and Thursday, right at market open, as always. And we'll talk about what's going on in the markets. Tomorrow, we're going to have a special session during our morning market memo time. We'll be talking about the Fed. We'll be talking about interest rates, and we'll be doing a deep dive into the bond market. And most likely, we'll probably continue that on Thursday for our morning market memo session as well. So guys, trade safe. I'll hang around in the Discord for a bit.